There's a lot of noise out there right now about the housing market, crash predictions, skyrocketing inventory, and talk of timing the perfect deal. But if you've been relying on headlines or social media, you may be getting the wrong picture. In this month's Orange County Housing Report, we are cutting through the noise and crushing the most common housing myths with real local data. Whether you're buying, selling, or just trying to make sense of the market, this update is for you. Hi, it's Christopher and Broox Mahr with MMG Real Estate Advisors, your local Orange County Realtors, with your market update for June of 2025. Now, let's break down the data.
Myth versus reality in today's market. There's a lot of noise out there, especially on social media, from housing crash predictions to exaggerated headlines. Negativity gets the clicks. But here's the thing, fear isn't a strategy, facts are. Myth number one, the market is flooded with homes. Now, inventory has risen, but it's important to understand the context. Yes, Orange County now has 4,595 homes on the market, a 75% increase from last year. But that number is still 39% lower than the pre-COVID average inventory and less than half of the levels seen during the Great Recession. We're moving back towards balance, not oversupply. Myth number two, prices are about to crash. Now, there's a difference between softening prices and a crash. Appreciation in the LAOC metro area slowed from 9% to 3% year over year. As inventory grows and demand remains steady, some price pressure is building. But we've seen normalization, not collapse. Homeowners are sitting on record amounts of equity, and most have fixed rate mortgages, strong credit, and stable jobs. Myth number three, no one is moving because of their low mortgage rates. While 88% of California homeowners have mortgage rates at or below 5%, more people are still choosing to move. Through April, Orange County saw 19% more homes listed than this time last year and 39% more than 2023. Life events like job changes, growing family, and retirement are continuing to drive movement. Myth number four, the smart move is waiting to time the market. If you're hoping to buy at the perfect time, you may be waiting forever. We have seen small drops in interest rates already trigger surges in buyer activity. When rates dip, competition increases, especially at the entry level. Waiting can mean losing your edge. If you're financially ready, the right time is when the right home shows up.
Let's talk about the numbers. Active inventory. Active listings increased by just 127 homes over the past 2 weeks, only a 3% bump and the smallest increase since January. We are now at the highest inventory level since July of 2020. But even with more homes hitting the market, we are still far below the pre-COVID average of 6,370 homes. The bottom line is, it's not a buyer's or a seller's market, it's a strategic one. Current demand. Demand measured by pending sales over the past month rose for the first time since March, now at 1,621 homes. It's still the slowest May since tracking began in 2004 and 69% below the pre-COVID average. Rates inched up from 6.75 to 7% this spring, which continues to challenge affordability. As we shift into the summer market, expect demand to soften slightly unless rates fall. The expected market time. With both supply and demand increasing, the expected market time dipped from 87 to 85 days. Last year, it was just 48 days, and the pre-COVID average is around 70 days. Condos are moving slightly faster than detached homes, 77 first 91 days. For sellers, pricing right is key. For buyers, there's more time to make a thoughtful decision, but not unlimited time. The luxury market. The luxury market, which is homes over $2.5 million, now have an expected market time of 194 days, down slightly from 196. Inventory rose 3% to 1,218 homes, and demand ticked up by 4%. The top of the market is moving just more slowly. Ultra luxury properties above $6 million improved from 382 to 376 days. Financial market stability and trade progress may be helping buyer confidence at the higher end.
The bottom line, buyers, stop waiting for a crash that isn't coming. Focus on your budget, your needs, and your long-term goals. If the numbers work, it's a good time to buy. Sellers, inventory is rising, but still low by historical standards. Price your home correctly and it will stand out. Everyone, don't let social media steer your real estate decisions. The data doesn't lie. This is still a strong, resilient housing market. If you're thinking of buying or selling, We're here to help guide you with facts, not fear. If you know someone who might benefit from this information, feel free to share it. And if you found this information helpful, make sure you like this video and subscribe to the channel for more updates on the Orange County housing market. Thanks for watching, and we'll see you on the next video.